All right, folks, welcome back here to the Diagnostic Trading Hour. Welcome back. I'm glad to be back on the show. I've been out for a little bit. Had a couple things. My daughter had a big horse, clinic where she does her barrel racing, and then I had an argument with an Andalusian, one of my horses, and so he decided to land on my foot, or my leg actually, and so that put me down for a little bit. But learn not to argue with him like that. And there's a time to argue and a time not to. Whenever you're working with an Andalusian horse. So he just didn't want to go in the trailer, is what it came down to. And yeah, I had somebody else let him that has a little more experience doing that. Anyways, let's check out what's going on. We have a lot of things that have been happening in the markets. And as far as just what's on, today there's a lot of movement on the yen where, things were moving last night. And I want to catch you up on just a few things. There's so many things that I catch you up on right now, but I want to update a couple things over here as I'm getting all back on track for this and see, what do we have left for the rest of the week. We had, of course, our unemployment rates and everything else last night. And going on down, let's see, we have, of course, the oil inventory came out this morning, and that came in pretty much on par with expectations. And then if we go over and we look at tomorrow, we're going to have core retail sales and retail sales. Unemployment claims, not usually that big of a deal. But with core retail sales and retail sales, that usually gets us about a 35 pip neutral trade on the euro dollar. Then we'll have Greek government debt crisis vote. So this is interesting. This is the Greek Parliament, and they're going to vote if they decide, basically they're going to make a decision, if the measures agree with the creditors in the third bailout. The third bailout program, so for it to be implemented. So again, the Greek Parliament will vote to decide if measures agreed with creditors in the third bailout program will be implemented, meaning will they do it or not? Okay. And so there's a pretty big, this is going to be massive. We don't know what time it's going to happen, but this is on the list for tomorrow. If we go over here, let's see, we got one article over here on The Guardian. Let's check that out. And the Greek Prime Minister seeks a bailout ratification as doubt remains over German support. So Parliament will, to recover the emergency bailout, has to ratify this bailout text amid uncertainty on whether $85 billion has been backed by all the EU member states. Greece Parliament will convene for an emergency session to ratify the text of a new multi-billion-dollar euro bailout, according to the Parliament website. But the timing of the crucial vote remained uncertain, and doubts persist about whether the deal enjoyed the full support of the EU capitals, being Germany. It's not clear when MPs recall their summer recess, but Tuesday, and this is the Parliament for Germany, everybody was at recess. They have to approve any new spending. So one of the rules they passed about 2 years ago, was that their parliament had to approve any additional bailout funds that went to anybody. Okay? And they were on recess. They couldn't even approve this whole Greek crisis still. And they had no reason to rush back because they're really not happy about it anyway. So somehow or another, they called everybody back from recess. And Prime Minister Alexis Tsipras would begin discussing the 400-page bill at committee level, with reports suggesting that the parliament committees would probably not meet until Thursday morning. So even the Greek Parliament being on recess, the German Parliament being on recess, it's been really, really interesting. But they called for the Parliament to reconvene and to save the debt-stricken country from bankruptcy and securing its future and the euro. The government wants the Parliament to ratify the bailout. Greece's third in 5 years, so it can be approved for Eurozone finance ministers. Allowing vital first transaction to be dispersed, and the time for a major $3.4 billion debt that is due on the 20th of August. So, just like normal, they're, cutting things close. They have to get their parliament back together. It could happen as early as tomorrow, could happen Thursday, but they owe $3.4 billion on debt. So apparently the initial reaction to the agreement in Brussels had many concerned. And the deal could become unstuck and could run in an opposite position, again, particularly in Germany. The Greek government greatest concern is the German finance minister, Wolfgang, who will reiterate his position to a deal to insist Greece should instead be granted a bridging loan to allow it to meet the 3.2, they need to get the numbers right here, billion debt payment. What's 0.2 billion? It's close. To the ECB on August 20th. So we might need a few days. Bridging funding, one EU source. We need that number to the states. If it's approved, da 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 da. So the whole point is be ready for it. Okay. Uh, the drama is going to go on. Just when you think the season has wrapped up and there's a series finale, no, 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 no. We got 4 more bonus episodes coming up. Okay. So that's what's about to happen. What does that mean to you as a trader? That means volatility, and you get to take advantage of that volatility. All the uncertainty creates volatility, and so volatility means it means movement. Okay, so as this continued movement starts to happen, and as people start getting nervous and start selling off the euro, and as China devalues its currency, and as all these things are happening right now, take advantage of it. But a lot of you are like, I think it's time for a summer break. No, wait until the volatility is over, then go take your summer break, okay? But trade it with defined risk, okay? Either buy spreads to hedge your futures or Forex trades, or just trade, spreads outright, or, maybe if you want to dig deeper, dive into the binaries. But, there's a lot of ways to embrace this volatility. It can be really scary, though, if you're doing it with undefined risk. So make sure, again, that you are, diving in and learning how to do this stuff, because a lot of people are like, well, I'll learn that eventually, or I'll get to that. It's like, and then these opportunities arise and you throw away the money. I mean, the volatility last night, I put on like a $5 or $8 trade. First $80, put $80 up, made $920. And I did it in less than 5 minutes. That's what volatility does for you. Okay. That's what you want to be able to take advantage of. And when you see these kind of headlines about countries and exiting and, parliaments not agreeing, and, that's why I paid. I'm like, okay, so dates I need to look at. Well, they're supposed to meet tomorrow. May not happen till Thursday. Ooh, it's going to be interesting on Wednesday. If Thursday something comes out, it's going to be even more interesting. And then we're going to go into a weekend with this thing looming over everybody's heads. And then by the 20th, they got money due. And if they don't pay it, boom. Okay, another one. Does it mean the world comes to an end? Well, I think we've seen by now the world does not come to an end. But what we have seen is the market goes nuts. And just learn how to trade a crazy market. Okay? It's the world you live in now. Ever since 2008, everything has been pretty nuts. There's been some calm, quiet, boring times, but there's a lot of big, moving, exciting times. And if you learn to embrace it with defined risk, then you can be one of those. A lot of people did very well during the Depression. A lot of people did. Okay? So in crazy times, in rough times, you don't have to be on the outside hoping it'll get calm again. The people who do that are the ones who never make the big bucks. So anyways, I encourage you to check it out, dive in, get at least a demo account and trade through this craziness, because there's going to be more. And that way you'll be ready for the next time around. Okay? So, normally summertime can be, a slower time, right? So I'd say this summer's been a bit of the exception. We had a few days there where it's like, where did all the IV go? And it sounds like some sort of Enigma song or something. But anyways, but it's back. It's between China and between Greece and between Germany. They're determined to make sure that we have something that we can trade. And so, I appreciate that and their contribution to, all of our trading needs. And so we can go ahead and, move forward with that. But, just to talk about the seasonality that you should be aware of, a lot of times it is slower. A lot of times there's a saying called sell in May and go away, and that's because things slow down. Everybody goes to the Hamptons, and, that's coming up, okay? It's going to be interesting because we got this August 20th deal due, and usually people are starting to check out, and they're taking off through the whole Labor Day, weekend period there, right? And, it's usually a very difficult time to trade because the normal players are not there. It's sort of like, trying to predict traffic patterns, on the day of Christmas or the day after Christmas, or New Year's, or, 2 a.m. on New Year's, right? So it's different than predicting it on an average regular day at 5 o'clock or 6 o'clock because the normal players are there. But when the players change, when different people come out and different people stay in, then predicting that pattern becomes a lot more challenging. And that's sort of like what seasonality is. It's not some hoodoo, voodoo, whatever thing. It's people by nature are very pattern driven. So they do the same thing. They get up, they wash, they take a shower, they wash their hair, they get their kids, they, give them cereal and milk, and they get in the car and they drive them to school and they drive them to work, and, all that stuff's coming up, right? Those patterns change. So when events like this happen, patterns change. When holidays happen, it's, patterns change. And so when you start mixing holidays together with, Greek bailouts, then the patterns can change. Now, if that bailout happens and everything passes through and the payment's made on the 20th, then we expect it to get pretty slow and quiet, and the IV often drops down in the end of August. And then going into September, the market flies somewhere as funds start to unwind and take their profits for the year. Okay? Final third quarter there. And then October, November, December, October can get really, really interesting. Either it's a great month or it is the worst month. Think about all the crashes and when they happen. Just about every one of them is in October. November, things start picking up about a week before Thanksgiving and usually rally into the end of the year. So you can go back, you can look at these seasonal patterns. That's pretty, easy to do, pretty helpful. There's a lot of tools out there that can do it. And if I pull up an example, let me pull up like a chart for you. We'll go in here and we'll load a little seasonality chart. So I'm going to go and I'm going to roll it up. There's the daily chart. And we're going to go in and we're going to go into, there we go, seasonality. Okay. And seasonality, the red line is the average movement of the euro dollar. And the blue line here is what the euro dollar is doing up to now. So this is how it usually acts going forward. We'll look at going backward. Okay. We'll talk about it when we get back, but it's pretty interesting. You can see the average move and what's been happening that's not average. So stay right there. We'll be back. Right after this break, we'll look at a few different markets on the seasonality. All right, folks, welcome back here to the Diagnostic Trading Hour. And we're just talking about being ready for the volatility that's in front of us right now that's coming up. And we just went over, the Greek bailout issue and the vote that is going, essentially on Thursday is when the vote is expected. Pretty light news day on Friday. We got a PPI on, the USD. We got manufacturing sales. There's German preliminary GDP, which actually can be decent. And we got a preliminary University of Michigan consumer sentiment at 10 a.m., pretty much a non-factor. Okay? That helps us wrap that up. Euro USD, you can see that normally this being like the volatility in this period, and not started off pretty normal, but then all of a sudden we got these big down moves, another massive down move when it's normally flat. So what are we going into? So this doesn't help you a lot because you can tell that we're off track on seasonality. And we have different kinds of seasonality. We can look at 1 year, 2 year, 5 year, right there. So we got a 5 year. And we can zoom out. And what I like to do a lot of times to see a bigger picture is I'll be more inclined to go to the weekly bars just to sort of see what's really happening on a week-to-week basis. So are we on track with it, or are we sort of just, doing nothing like what's happened over the last 5 years? And you can see there's just so much more volatility. We're going in a very similar pattern. In the beginning of the year, the euro dollar was crashing where normally it's rising. But then it started to lead down, and we finally got that move down. You just get a little bump up, and then it starts coming back down. And we get a little bit of bump up, and we're about like a week ahead on the schedule right now, or a week behind, I guess you actually can say, on the schedule. So right there, pretty soon we should be looking for another bump down. It's just they've been bigger, so it sort of looks weird. But if you can see what I'm saying, like all of a sudden, okay, it's dropping right here, and then we're seeing it drop right here. Okay. So about a week or two after, we're starting to see sort of the normal, like right there. See how that decline happens? And right here, we start seeing the decline happen. Okay? And then there's another little decline. And then we see another decline. It's just bigger. Okay? So when is the next, decline happen? Well, it actually has happened. So we should see another one here in about a week. So I see the decline. So that pattern is actually staying very similar. It's just bigger right now on the euro dollar, and it's about a week delayed with everything that's been happening. Okay. If we go and we look at the S&P, see what goes on in it. Usually it just goes up, 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 up. And well, you can see here that, going up. So we're getting it, and but we're still getting pretty big moves, and it's actually, a week ahead on the pattern. So it's been rising. And finally get that decline, and then boom, now it's going down. And it actually starts rising again a little bit right at the end of August, into September. And then by the middle of September, Labor Day, all that stuff gets over with, okay? And then we see a drop. Okay, we see that right into the end of September. And then October, pretty much going to rise into the end of the year. So where does that put us right now? That means that pretty much historically, we should see the market start to rise, especially if you see this Parliament thing go out. And then we should see it just steady up with one big drop shortly after, middle of the month of September. And then followed by, after that drop turns around, this, besides a couple weeks where we have like small drops, we should see the market continue to rise. We can look at this on gold. See how does it look like on gold seasonality? We're backwards on gold seasonality right now. It's been dropping, continuing that drop. And when gold usually this time of year is rising. And so we go back, we can look at the rest of the year. Let's see, it was dropping there, going up. It went down when gold went up. It went up when gold normally goes down. It went up when normally goes down. And then it leveled off there. This pattern actually looked very similar. Starting to rise with the seasonality. Starting to drop with the seasonality. Okay? And then we diverged from the seasonality, and we had a big drop over these 2 weeks. But now we're starting to see a rise, and normally, if this continues, we should see a rise for the next few weeks before gold basically starts its decline at about the same time, right there about the middle of September, as the market's rising through the end of the year. Gold, with a little bit of, whipsaw process, usually drops, as much as 70 points or so over the course of, September to January. I'm going to link check out oil. Oil's been pretty crazy lately. We'll see how this compares. So, flat versus, I guess it went down, went up. But just bigger moves. Now it went down when the market was flying up previously over the last 5 years. And then it's rising with the market, and it's declining with the market. It usually declines pretty much the rest of the year, over the last 5 years. So with the low prices we have already, we could definitely potentially see some lower load continuing to kick in on oil. All right, stay there. We'll be back right after this. All right, folks, going back here to the Diagnostic Trading Hour. We're going to go through, check out a few more of the markets, pull them up. We just went through oil. Let's go through, let's check out the DAX, and one of my favorite indices to trade. Oh, they don't have it in Thinkorswim. Oh, too bad. But then let's check out the dollar yen. It's had some interesting moves. And that's not the way to do it. There we go. Here we go. I got to get my mind back on the Forex mindset. So on the USD yen. And so it's going over here. It's popping up and moving down. Let's see. Moving down right there. We're going up. Not on track at all with the normal cycle. Let's go in. Let's look at a daily. And let's see how that looks right here. So popped on down and on down over here. And basically going anti the cycle at the moment on the USD yen. And then let's just take a look at just a normal chart, because we had some pretty interesting movements. And we'll go down to 1 day, and then we'll see if we can get rid of the seasonality here. Right there. One thing we do see is that the yen normally, so it hasn't been going at all with this, but normally rallies hard over the last 5 years into the end of the year. And we did get a big rally pop right here. It gave it all back. If it breaks out of that, and this might be more significant of like what we're seeing right here, okay? If it breaks out of that, we could get a nice big up move on the US yen. So really it will depend upon overseeing what China does and how they continue to mess with their currency, which of course is messing with the yen currency as well. And if we go in, we dive in a little bit closer here. You can see last night we had this fantastic, amazing movement, and I hope you were trading last night because I mean it was just there was so much good. It was just flying down. I was like, hey, can you just hand me the trend? And it wasn't all like in seconds. It wasn't like boom, done, it's over. I mean, these are 5-minute bars. They're just hanging out, going down, going down. Okay, let's chill out and do a little trend up. That's over. Okay, let's go down. A little trend up, going back down. I mean, like it was just handing it to you. So, you know, if you weren't trading last night, you were definitely missing out on that. It was a little quieter in the evening, but it was still smooth. It was really, really smooth last night. And, you know, you can trade these contracts. When the implied volatility, if it does get sucked out, contracts are going to be incredibly cheap. Okay? And that means you can go in and you can buy out of the money contracts. And really close to where the market is. And so you have to be able to switch gears. If you think you're going to trade the same strategy on a option all year round, you're going to have a rough time because implied volatility impacts what the best club is to pull out of the bag. It's like I tell people, like you need to have a golf club that is an iron. You need to have, you know, a driver. You need to have a sand wedge. You need to have a putter. You know, you need to have a few different clubs when you trade options. And so depending upon the market conditions, the implied volatility, you can pull that out and take the best advantage of it. Sometimes you're going to need that one that, you know, goes really far. Sometimes you need one that you just put it, you know, deep in the money option, just put it, make some money, okay? Or you got to swing for it. You're getting out of the money because volatility is high and cost is low. So there's a lot of ways to put this together, but hopefully you started to dive into it. And don't feel like you have to master everything to do anything. But I also don't feel like you get one system down, one strategy down, and you have everything you need for that, okay? Reminder, oil is going to be rolling on Nadex this weekend. And future traders, you need to be watching, okay? Be watching volume to see when it's coming up. So if we go over, let me show you how to watch that volume. There's a lot of ways to do it. I usually don't trust a platform. I like to actually see the volume. So, because some platforms will put their date in or whatever. But if you want to see it, you want to know if you're trading futures themselves, okay, then you can go over to the CME group. You can then click on trading and energy. From there, you can go down to products, okay? And then from here, you can go down and you can then look at volume. And then on the volume, you can see the contract and where the volume is. Right now it shows, you know, volume in September. We got obviously a very increasing volume, highest volume total right there on Globex. And so volume there, but starting to pick up for October month right now. And, you know, if we go in and we look at Nadex, it'll say, hey, what contract is the month on? So if you're a Nadex trader, you need to, it's a derivative. So you need to be following that month's contract, okay? Very important that you're following that month's contract and not just randomly doing whatever it is that, you know, you think you should be doing. You want to be trading the actual contract that follows it. So if Nadex, if you hop in there and it currently shows, you know, September, you should be trading September until it says October. At the end of the week, on Friday after the market closes, they're going to roll over for the next week to October. Well, what if you trade oil? What if you trade oil futures, CL futures, okay? Well, look at the volume, and when the volume on October exceeds that of September, then the roll has taken place. So often I'm not worried about like intraday if the rolls out. I just look at yesterday, okay? You know, pull it up at the end of the day, see. And usually I'm rolling by Monday. I'm usually not like, oh, it's roll day. I have to roll on Thursday. I have to roll on Friday if I'm trading futures. I mean, unless I'm charting Nadex to trade Nadex, but if I'm just trading the futures, I mean, almost all the time I can just wait till Monday. And there's plenty of volume and plenty of liquidity. Okay, so anyways, just check that out. You'll notice also you can see the change in open interest. You know, 62,000 contracts decline in open interest. Over on oil, we're at 43,000 increase in open interest in October. So they're starting to roll all that stuff over. And some traders rolling into November as well, but not a whole lot. Only 71 increase in November contracts. So really the big volume, even the open outcry, they're stuck in September, but they're going to be rolling over to October soon. And then what you see where you see like, well, there's 30 there and 75 there. Well, that's them doing spread trades. So, but anyways, go in and check that out. Just watch that volume. It's helpful. It's a simple thing to know. It's something that some traders just they haven't learned yet. And you can do this. If you're trading metals, you go there and you look at gold. Okay, silver, copper. Here oil, natural gas, being a couple of the main ones. You can go obviously to the indices and look at the S&P and look at the Dow, look at the NASDAQ. You can go over and you could look at FX pairs. Now they roll on a quarterly basis, so they're actually very, very scheduled, and they pretty much roll like clockwork. So, and then what do we got over here? Let's see here. Next thing I want to look at with you. Let's see some of the ways to take advantage of volatility. Obviously, we talked about out-of-the-money contracts, where you can buy those really, really cheap contracts and take advantage of them. But, some of the other ways that you can hop in and, not just, again, try to do the exact thing that you've been doing. And let's see here. Make sure that's up. Okay. Let me see if I can pull up something for you. I've been wanting to show everybody this, but we'll go through step by step. Trying to think. Let's see, where is it at? All right, we'll just it's not on that site yet, but one thing you do is go in, and there are a lot of these, but let's look at one of them, just the common one, the VIX, and back out on the VIX. Okay. We'll look at daily charts, and this will give you a good idea of where volatility is and where it's been. You can even pull back, and if you want to see more time, here's 3 years on a weekly basis. What's the range of volatility? And something I suggest is that you sort of log where implied volatility was at the beginning and end of the day on days that you trade, and what system you traded that day. And start learning, okay, what systems do well in what kind of volatility. I mean, I seem to do really well today. Wow, out of all the last 90 days I've traded, 40 of them that said I did really well, 30 of those said volatility was between this price and this price on the VIX. Okay? And so that is actually a great clue. It's a great way for you to learn, hey, what environments are working well for whatever it is I'm trading. And there are other volatility indices. Okay, there's more than the VIX. The VIX is technically for the SPX. Okay, but if you go over to cboe.com and you go to products, okay, then you can also, so we go over here to the products, and they have all these different volatility indices. And I'm trying to find out where's the fastest, easiest way to get you there. So we got minis and weeklies, and they even have their binaries, which have like zero volume. So let's go to CBOE and let's just type in volatility indices and see if they list them all out. That's not going to work. Let's see, CBOE volatility indices. Okay, let's see. They got us VIX. There we go. That's what I wanted. Okay. So, cboe.com/, second ad is under VIX. So if you go to CBOE, you click on products, then you click on VIX volatility index, and then under that, you'll see volatility indices. Okay. And under here, you can see all these different volatility indices. And there are more than even what's listed on here. This is just the VIX's ones, or the CBOE one, I mean. And so here's our main, the VIX volatility index. Then there's the VIX of the VIX, but there's also NASDAQ volatility index. So if you're a NASDAQ trader, you can look at the VXN. There's S&P 100. There's Dow Jones. There's Russell 2000. Okay. There's ETFs, China ETFs, Brazil ETFs. So if you're doing emerging markets and things like that, there's U.S. Treasury note ones. There's interest rate swap ETFs. There's oil ETFs. Okay, we're looking at oil. So we got gold. We have silver. We have gold miners and energy sector volatility indices. You got FX euro, FX yen, FX pound, Okay, they actually just started these up. They used to just have the one big euro currency. Now they actually have individual ones. So, if you're a euro trader now, I don't know if they have them in Thinkorswim, but we can see. Okay. They're pretty good about adding a lot of stuff. See if they got it. Yeah, there we go. Sweet. So right there's your, I grabbed the Amazon one. That was Amazon. By the way, Amazon has one. Apple has one. Goldman Sachs has one. Okay. Even Google and IBM have it. There's the Amazon volatility index to show you where the options are priced at. Let's see here. Let's go and let's look at the euro one just because that's one of the big topics with the Greek bailout and everything else. All right. So they don't have as much data because it's newer. Like I said, they started it earlier this year. But we can go in and look at it and see, like right now, the volatility index is actually pretty low compared to the, only historic data we have, which is January to now. But it's actually on the lower end. I expect it will increase going into Thursday's vote. Okay. And then going into August 20th. But you can see where it was really high when that big Brexit thing was all there. Right now, pretty slow, pretty low. Not a lot of volatility built in. We go in, the yen had some decent moves last night. Let's look at its volatility index. Okay. So these are really cool. The simple things, it actually rose up. Remember the yen was crashing down last night? And we can look at, what did it look like last night? And, the one drawback on the indices, this is the one thing I don't like about them, is I wish they would just leave them open, all night. Okay? Because, you go in here and you can't really, buy the contracts. So they're indices. And, but I wish they were open all night long, because they were, then we could actually see the overnight movement. What you do get is you at least get the gap here. See how it goes to 415, that opens up right there at a little bit early. It looks like what is that? 820 something. And so we get this gap. Well, if we go in and we look at, a dual chart with this. Oh, let me go here. I need to get something that didn't have anything on it. Let's see here, studies, and then let's just delete. There we go. Remove everything. And then let's go in and let's look at USD yen. And let's see, we got 8 a.m. So let's go over here to, well, we started yesterday at 8. And we'll just zoom into today. And then you go into today at 8 a.m. Pretty flat market. I'm not seeing a whole lot on it. And, pretty flat on the volatility index. Not giving you a whole lot. Most of that movement happened from last night. If we back up and we look at what happened last night, see how the yen just crashed down? And that's why this will go the opposite direction. Okay, that's why this flew up. The premium went up on the yen today because of the crash last night. So when the market opened up, then you should have saw more expensive, as it was rising, you actually would have saw more expensive binaries, more expensive options, more expensive spreads this morning on the yen with the increase in the volatility index. So hopefully that's a couple tips that'll help you out. Stay right there. We'll be back right after this. All right, folks. Welcome on back here to the Diagnostic Trading Hour. And we're going through the various volatility indices, and I talk about how we could look at, yen, we could look at euro, we could look at oil, we could look at gold. And a lot of traders don't even know these indices exist. They just look at the VIX for everything. Like, the VIX is up, the VIX is down. Well, if you're looking at the S&P, fine. But if you're looking at gold, don't use the VIX. Use the gold volatility index, okay? If you're trading oil, don't use the VIX. Use the oil volatility index. If you're trading euros, don't use the VIX. Use the euro volatility index. And start charting how your trades are doing in relation, okay, how your trades are doing in relation to where that volatility index is. Very, very important for you option traders out there, you swap traders out there, trading binaries, trading spreads. to know the impact of implied volatility on the system that you use. So just something I wanted to introduce today on this one. It's not like a massive groundbreaking topic, but it is something that you should be tracking, you should be looking at, you should be aware when it's higher, when it's lower, because when it's higher, bid-offer spreads will often be higher, premium will often be higher, it'll cost more to buy an out-of-the-money option, and you'll get more on an in-the-money option. When it's lower, bid-offer spreads will often be tighter, okay? And it'll cost less to buy an out-of-the-money option, and you'll get less for a further out in-the-money option. You'll have to take on greater risk for a closer in-the-money option. So knowing this is part of how you know what strike you're going to choose. You know, one of the examples I've given is it's like, you know, I can teach you how to bat. I can teach you how to stand and how to, you know, bend your knees, shoulders, how to position your head, where to focus your eyes, how to hold onto the bat, where to hold it, how to swing it. We can go through everything on that. But at the end of the day, you still have to know how to read that pitch, know whether or not to swing at it, and how to swing at it, whether it's a curveball or a fastball, you know, or a floater or whatever it is that they're throwing at you. You got to know how to swing, and you have to know how to read the pitch to decide whether or not you're going to swing. This volatility indices, this is one of the things that you look at to know what kind of balls are going to be thrown at you. So when you swing that bat towards that strike, okay, and everybody's yelling, batter, 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 and you're like, I want to hit it. Which one do you swing? Or do you swing with a different bat? Okay? So do you put it a pinch hitter? You know, how are you going to handle this situation? And it's not just I can read the market up and I can read the market down. Good for you. Or I can read the market flat. What's the best option? Is there a reason this costs more today than it did yesterday? Is there a reason it's cheaper than it was? Okay? So, you know, what are you going to do next? Are you going to go, that was a good idea, that was a good show? Or are you going to hop on over to the CBO's website, okay, and find their volatility indices and start actually looking at the implied volatility on the contracts you trade? Maybe even go back to some of your, if you've done a good job and kept trading journals, go back and look at what was the IV on the day that I was trading. Could that have impacted me? Because I was getting, you know, stuff that was really close. Or maybe really close works well. It's when it's really far away, but the IV is so high that it flies against me and I can't make good calls. Okay? So what are the correlations, and can you use those to give you an edge into trading? Diagnostic trading is the name of this show, and diagnostic trading is about seeing the market in the way other traders look at the market, but being able to take advantage of that to be one step ahead. You can't do that unless you know your own patterns and your own systems and how they're impacted by IV. If you learn that, though, you can be a step ahead of other traders because you can know what kind of contracts you should be choosing. Y'all have a great day, and I'll see you tomorrow here on the Diagnostic Trading Hour.